There you go.
Hey traders, Cousin Vinny coming to you from theclosingprint.com on September 13th, Saturday, with an analysis of the markets for the week ahead. This is a chart of comp. Notice this volume by price bar up here, where currently the comp is having some resistance, moving sideways. Note the above average volume on Tuesday and a possible MACD cross. We're also watching the NDX A50R, the number of stocks trading above the 50, dropping. We'd rather see this down here for a buy. Currently, it's closer to a sell area, which compounds the thoughts that we could be seeing a temporary top, perhaps come down to the 50-period moving average, which, if it continues to move a little bit higher, could be the support area that we broke above back in August. Note gold is down below this level we saw in late May, early June. Breaking down, looking pretty ugly for the most part, with MACD continuing to move lower. The monthly also looks just as bad. We could see this area tested here, right around the 1200 area. Note MACD's turning down. Volume is decreasing, but we do have this Kirby bar, or volume by price bar, to deal with. If we drop down below this, we could quickly see lower levels on gold, so keep that in mind. The industrials, same thing as the comp, except for the fact that we're testing a recent top that we saw in July, possible double top. We're moving lower. We are below this volume by price bar, and we tested the 50-period moving average, the green line, on Friday. Just be aware, RSI is moving lower, as well as MACD possible cross this week. The New York Stock Exchange Composite, also with a double top. We have this volume by price bars to deal with. We tested the 382. We closed below the 50-period moving average for the first time in 19 trading days, so keep that on your radar as well. The possibility we are trading in a range that we saw lows here in May, again in August, and then the highs here in late June and recently in late August. So we could be trading in a horizontal range here, coming back down a little bit lower. Possibility is we could test the 50% level this week, so be aware of it. The New York Stock Exchange Summation Index, NYSE, gave us a signal early in the week, and we started to see other indicators rolling over at the same time. Note the New York Stock Exchange Advanced Decline is also turning lower, as some of the other indicators that we follow as well. The Russell bounced on Wednesday at the 50-period moving average. Then we saw this engulfing candle outside day on Friday. MACD looks like it wants to cross as well. Note RSI and stochastics turning back down. The S&P 500 Elder Impulse system enabled here. We can see that we have on a daily a red bar on Friday. We don't have any major distribution or major accumulation to deal with, so we'll watch these two indicators. Currently nothing to see here, just digestion for the most part at these recent highs on the S&P 500. The weekly CCI signal, however, is on a sell signal. Note it's at 92.34. The bond stock ratio, we are in a bullish trend, so until we break this downtrend line and turn back up, we are still in a long-term bull market. We may just currently see some temporary weakness. The S&P 1500, this is comprised of the 500, the S&P Mid-Cap 400, and the S&P Small Cap 600. What we're looking for here is for this dip down below zero, like we saw on previous occasions where the S&P 1500 and the components were on a sell signal. And then we looked for the first green bar up above this indicator line. The S&P tick cumulative, which we've been pointing out during the week, on previous sell signal occasions we had a day or so before things started to turn over. In this case, in April, it happened the same day and we had a large down candle. But in late July, we had a couple of days to exit our positions. Note that we are currently threatening across here. We're touching the signal line, the 10 EMA, and we're possibly putting in a head and shoulders top, which would have a neckline down here just shy of the 1900 level. Now that's a bit extreme, but it's something that we should keep on our radar nonetheless. TNX, we talked about the 10-year yield. What happened this week? We broke above this descending channel, the upper trend line, and now we have the 200 period to deal with up here at 26.50 or 2.65 on the yield. The 30-year yield also broke above this descending trend line, and we have a target up here of the descending 200 period moving average. Note RSI on the yield is also moving higher. The ARCA Institutional Index, as you know if you follow us, we follow this particular index because it is the 75 stocks that most institutions hold in their core portfolios. So we watch these stocks here. We see the weightings and the stocks that are in the 75 components, names that are well known. Note the MACD cross, and the TSI is also turning down on the XII. Note where RSI is and the possible head and shoulders top here as well. We have the 50 period moving average just below price at 865.52, so that's a possible bounce area as well. Nothing to panic about just yet. The aggregate bond fund, which we watch in terms of the bond funds that we have positions in. Note the weakness here. We exited half of our position this week, none too early, as we continue to see weakness here as well as on TLT. DBV, the carry trade broke down early in the week. We mentioned that. It's at a bounce area currently. If you are bullish equities, you want to see this moving higher, and if you're bearish, you want to see this moving lower. Note the MACD cross and stochastics is oversold. IEF, the 7-10-year bond, weak as well, as you would expect. Note junk on a Kumo basis daily that we're at support. Whether or not we break down through Kumo and bounce is another issue. Note the volume. McClellan oscillator quickly spiking down. It's at minus 50. We want to see minus 80 before we would see a turn possibly. So we have some ways to go here on the S&P 500. S&P 1500, note that we are closed down below this area, so we're keeping an eye on that and the 50 period moving average just below price. Note the New York Stock Exchange advanced decline is turning over as well. TLT, we mentioned that, breaking down. There's a Kirby level down here we could see support at, right at the 112 area, I believe. More like the 112.75 area. So that's a possible bounce area as well. US dollar flagging out here at highs we haven't seen in a long time. Okay, so that was short and sweet. This is Cousin Benny coming to you from closingprint.com on September the 13th, Saturday. We're cautiously optimistic that we could see a bounce. However, we're also cautious that we could see further downside before we see a bounce. Meaning September is the weakest month of the year for investing. I hope this helps. Take care, and we'll talk to you soon.